Hi, today is Sunday, the 2nd of February, and this is the SPX Outlook for the coming week. As you can see, we've had a very interesting week with the market breaking the channel, and I mentioned last week that we could have a selling acceleration, and that would be watching this level around 32.80 to maybe 32.60, 32.80 as an indicator whether the market would stay in the upper mid-range, so to say, and or dip lower. And after a mean reversion on Monday, as you can see, the market hit and even extended over the 2SD. It's actually bounced back, but on that salient level, 3280, 3290, even though it was penetrated to almost 3300, the market resumed its course south, and the sell signal was valid. And on top of that, despite the mean reversion, the signal, the indicator here, remained very stubbornly oversold, even giving a potential re-entry right here. So what are we seeing here? Well, it's actually quite interesting because for 3 months we only had those Fib retracement patterns, and we were just looking at where the market could cushion a potential drop. And for the first time in quite a few months, we now have potential Fib expansion pattern being drawn here, with a first target around 32.30, second one around 31.90, and incidentally, the largest expansion would actually take us back to the very, very strong support area on 31.25. So after the acceleration and the mean reversion, as you can see, it went and stayed in this range below the moving average to stay here. At this point, we don't really have a mean reversion potential. This band here is still pointing downward. So we could have a further attempt to go and test this resistance area, so maybe 32.20, 32.30, possibly even going to the second fib from that December retracement pattern. That would mean around 3200. I don't really think, because the overall bullish bias is still prevalent on longer time frames, I don't really see at this time the market dropping sharp, and it may and probably will confirm that there's a change in direction, and it of course takes longer for the daily time frame to take heed on this change of tone. But at this time, I would say that the market will not drop below 3200, and of course, if there's acceleration, it may go all the way to 3170, but it should go in waves. So that maybe explains why last week on my alert service I didn't show much, I would say, anxiety or nervousness about this market. The market has been overstretched. Whatever market commentators say about that Chinese virus, or of course it may have a long-term impact on growth, but I would say it is just technical profit taking, and we now have to figure out where the support will be found. At this point, I would say 3200 looks like a good one, but it may just stop around 33.20, 33.33. Okay, now let's have a look at the shorter time frame. Here we clearly see that the pivot level has been rejected, tested a second time, so the downward pattern, the downward trend is definitely confirmed, and we also see here that this should be quite a strong support around 3200. So I would suspect that the market will congest now in this area, and will probably stay for a few days in this 3200 to 3280 range. It's going to take a while before the market actually breaks this 3280 to return to a bullish trend. So I would say that if the market keeps selling, of course this level could be penetrated just to reach that fib target around 3190. So maybe we will have some congestion with a bit of bullish pressure at first. Yeah, there's a first buy signal coming up here, so there would be some fighting, probably a tug of war, but I don't see at this point in time. I mean, a lot of news, especially FOMC, GDP, are behind us. We've had mixed information from those big takes. Amazon did show very, very good results. Facebook didn't, but Facebook may be embroiled into some data manipulation and in selection year. I mean, of course, there will be definitely hesitation, and maybe we'll see Facebook going on to a sell-off. But I'm not doing any analysis on individual stocks here. So I would say we will see again some bearish congestion here to 32 and maybe dipping to 31.90. If we now go, because the 4-hour chart can only give us some picture for maybe 2 to 3 days. Let's have a look at the longer term picture. There again, we see the same channel breakout, a very solid sell-off, a down signal for the first time, looking pretty good actually. This signal looks quite valid, and it's a matter of looking at where it could take us on a longer time frame. I would say that here as well we may have, because as you can see here, we don't have the same Bollinger Bands, so could be some mean reversion here, of course much slower. So maybe by end of the week we could see again here as well some the mean reversion taking the market back to the higher part of this range. We have of course the same pattern, so 3200 may be hit, 30, or even 3190. There's obviously some agreement between time frames because we've been in the same trend on several time frames, and that's why maybe it was actually good confirmation or reassurance for trend followers that, well, the market was just being bullish. Now there will be some confusion for a while, but again, I don't see the market going all the way down to 31.25 without a good fight, at least on 32 in this area. And I would suspect the market will stay in this range. Okay, that's it for now. Tomorrow we'll be recording the video on our positions for the class, and some of it will be public. And as you can probably sense from my voice, even though the VIX has now gone to higher levels, quite healthy levels, around 17, 18, I don't see a market sell-off developing right now. Although, of course, if we analyze waves, this could lead to, if the market drops and recovers to some area, we could have secondary fib pattern that will give us maybe the same or lower expansion targets. Since I mentioned VIX being in the 17-18, we can have a quick look at the term structure. Still pretty flat, so the volatility was not very, very low, which in a way is the same as on the underlying, the cushioning on support levels. That means that the surprise was not excessive, and now the term structure is flattish with some element of backwardation here, but nothing too drastic. I would suspect the market will stay quite conservative with a fair amount of hedging, but unless there's a surprise within the next couple of weeks, like widespread epidemic, pandemia around the world, or I mean, of course, a catastrophic scenario is always possible, but still relatively unlikely. So I would say that this fixed term structure should remain flat for a while. Okay, I wish you a great weekend, and I'll see you on Monday. Bye for now.